Hello and welcome to episode 4 of the Farmers Risk podcast. Today, I have the pleasure of being joined by Jake Moline. All right, Jake, thanks for sitting down with us today. So we don't know each other too well, haven't had a chance to drink a beer together yet. Start up from the top. Can you give us a little bit of your background? How'd you get to where you are today?
Absolutely. So I grew up here in central Iowa, small town called Dallas Center, Iowa. Did not grow up on a farm. My dad did. I had a little bit of an ag background because the nature of my dad's work with the Department of Agriculture. But I attended Iowa State University. Did not really know what I wanted to do when I started school there. Thought maybe finance was for me. Found out that through some accounting classes that I did not enjoy that and much more enjoyed economics. And I really liked ag biz, and those two things fit together really well. So those are the two things I ended up majoring in. And I started an internship when I was in college here at what was known as INT Stone at that time, is now StoneX. But started full-time right after school with StoneX, and I've been here for about 10 years. So first job, hopefully last job. When I first started with the company, I was working a little bit in the biodiesel space with risk management for biodiesel plants, but quickly transitioned over to commercial grain elevators. And that's kind of my main focus still, is working with, co-ops and private elevators across mainly the state of Iowa, but all over the Midwest. And I do deal with, a few producers out there, some growers, also some larger livestock integrators and some ethanol plants as well. So a little bit of everything, but risk management is primarily, my focus. And again, it's mainly commercial grain elevators. So my dealings with grain producers and throughout my career has mainly been assisting my customer, the commercial grain elevator, in helping the farmer. So my advice or risk management strategies that would be geared towards a grain producers usually been through the lens of grain origination, through physical grain contracts that the farmer would participate in with the elevator. So educating the farmer on how those work and how they can utilize those as part of their marketing plan and to manage risk. I don't do a ton of direct consulting with growers on financial or brokerage stuff. But we're starting to do a little bit more of that. The trends in agriculture that I don't foresee stopping or consolidation. I think, if you would look back 30 years, there were probably 10 times more cooperatives in the state of Iowa than there are today. And that trend is bigger, doesn't necessarily translate well for my business model. So, by necessity, you have to start to learn to do new things. And I think, if we fast forward 10 years into the future, there's going to be a lot of large farmers that have commercial grain storage setups at home that would mimic what you would consider a commercial grain elevator today. And we'll probably start to do a little more consulting directly with farmers. But I'm really excited about, partnering with you guys, and I'm excited about all the things you're working on. I think it's a natural progression of how this business is going to work. And as the grower gets younger and more progressive out there and more open to technology, and I think, you guys are going to be positioned very well to help serve that grower.
Cool.
But yeah, that's enough about me, but.
So there's a lot to unpack in that response. I want to touch on some of the stuff you said in the second half of that response later on in the call, but going back to some of the your earlier comments, didn't grow up on a farm, but your dad did, and you went to Iowa State and you went to ag. Oh, when you were in high school, was it always, I'm going to go to Iowa State and I'm going to study ag, or did ag kind of find you at the university? I know I always feel like an outsider because my grandparents grew up on a farm, parents didn't. Wow.
Yes. So the latter is the case, Nick. It was foregone conclusion, I would say, that I was going to go to Iowa State for college. Just I didn't apply to any other colleges. I always wanted to go to Iowa State, but what I was going to do was very much up in the air. And I kind of just fell into the economics route. And anyone who went to Iowa State and majored in ag biz knows that it's basically economics. You take 2 more classes and you have a double major. So just given the nature of the economy in the state of Iowa, it's what I learned in college is exactly what I do on a daily basis. It's all economics. It's all, a little bit of sales thrown in there too, but mainly it's analysis, customer relationship management, and I really enjoy the economics piece of it and studying supply, demand, and the markets and being a student of the markets. And it's nice because they change every day. It's a new thing every day. Writing comments every morning with, very little change and information can get a little cumbersome at sometimes. But for the most part, it's a fast-paced job. And, being a commodity broker, you have a lot of freedom and flexibility in what you do, I would say. It's not an easy thing. It's not for everybody. But I've always felt a little bit like an outsider as well. When I was in college, I didn't know a lot of the ag kids, and this probably isn't kosher for the podcast, but my dad always said, I grew up one step from the shit pile. So didn't grow up in the shit pile, but, one step removed from that. And he and his twin brother did grow up on a farm in Rolfe, Iowa. We still own the ground up there. So it's kind of fun to be involved with that directly in our renter now and try to help them out as well. So
cool. On the econ side, and I went at U of I and studied ag, and econ always lost me, especially on the pricing pieces, because it's like supply and demand, and where these two things cross, that's knowing this formula exactly. This is how you're going to price that product. Did your eyes glaze over? It's kind of like okay, no way are we going to pull in that perfect amount of data to price that just perfectly. I understand the concept, but that's where econ kind of lost me. I don't know what your thoughts of during those lectures were.
Yeah, I mean, it made logical sense to me for the most part, which is why I enjoyed it. Whereas like things like accounting, I glossed over with that type of stuff. So the econ stuff always kind of makes sense to me. And granted, things in theory are different than in practice, and you find that out when you get into the real world. But a lot of the stuff that I learned in college, I do use today, and it's kind of fun to look back on. You don't retain everything that you learn in college, but I'd say economics teaches you how to think about things more than anything.
Did they do any behavioral economics whenever you were in school at Iowa State? Okay.
Yeah. All right. The micro stuff's really interesting as well. So there's different macro and micro, and the classes that I really enjoyed at Iowa State were pertaining to futures and options and the commodity markets specifically. So, when I had the opportunity to have an internship here, and then it just kind of, I got really lucky, to be honest with you, with the internship that I had and falling into the company that I did. And I hope I'm here for another 10 years, at least.
So that leads into my next question. Did you liked futures and options and studying that stuff in school? Career fair at Iowa State, did you just beeline to Stone and say, this is the place? It's kind of like when you applied to Iowa State, said, I'm only going to apply to one place. I'm only going to try to interview at one place.
That's a good question. So people who have ag biz degrees from Iowa State, they could do anything from being, a seed salesman or, working in agronomy sales, or grain merchandiser is a really common one. So when I was in college, I didn't necessarily understand the difference between being a grain merchandiser, which would be the person that is my customer today, right? And being a commodity broker, a grain broker, two very different things, right? And the easy, simplistic way for me to explain what a commodity broker is think of a broker like a bookie, right? The bookie, helps facilitate the trade, doesn't really care where the market goes up or down. Obviously, you're not going to maintain or keep clients if you don't do a good job advising them on that. But you get paid a commission, and it's commission based, and I had applied at a lot of different merchandising positions as well. And at that point in my life, I had a serious girlfriend who is now my wife. And, when you're breaking into the merchandising industry, there's kind of two different paths you can go down. You can go with the big companies like ADM or Bunge or Cargill, or you can decide to work for more of a local regional cooperative or a private elevator. But a lot of times when you're dealing with those bigger companies, early on in your career, you get moved around a lot, every year for the first 6, 7 years. And when you have a serious girlfriend who you're planning on marrying that doesn't necessarily want to move to Western Kansas and then to, Central Illinois and then do that for 7 years, that seemed less appealing to me at that time. And I think I chose correctly for me, but there are definitely people who have made really, really good careers and get a lot of good experience doing that. It's just can be a tough process to go through early on in your career. So
Yeah, that was quite a sales pitch that you got from some of the big elevators. It's like it was almost like the engineering school weed out session. All right, you're going to be new. We're going to ship you off to Timbuktu for 8 months, see if you hold up. Then we're going to slowly bring you back into civilization, depending on your location.
yes, so if you last, then yeah, it works out for you. And there's people who have built great careers doing that, and it just wasn't a good fit for my personal situation, which I'm again extremely lucky that I found a company that I could work very close to where I grew up and close to my family and everything, and have good opportunities here as well.
So now you work at StoneX, and Stone, obviously an FCM. Can you give just a general definition or your pitch of what an FCM is?
Yeah. So it stands for Futures Commodity Merchant. And anytime a individual or a commercial customer wants to open a brokerage account and place trades on a centralized exchange like the CME, right, or the Chicago Board of Trade, they have to do that through an FCM. So the FCM is helping aggregate those individual customers for the exchange, collecting margin calls, sending money back. So it's kind of the intermediary in between the central exchange that matches up two counterparties that are unknown to each other. The exchange sits in the middle, and then there's a buyer and a seller on each side of a transaction, right? And it doesn't necessarily matter who it is because the exchange is guaranteeing the performance of that contract that the trader enters into. And the FCMs essentially help facilitate the flow of trades from the commercial or the individual into the central exchange. So we do obviously a lot of business that's cleared transactions through exchanges, and not just the Chicago Mercantile Exchange, but other exchanges as well. And we also do a lot of over-the-counter business. So over-the-counter or OTC contracts are bilateral contracts in between two counterparties. They're not centralized at an exchange level, but that's been a big growth area for our company since I started here 10 years ago. We do physical commodity trading as well, not near as much as some other companies, but we do some. Do global payments, interest rate hedging, currencies, we're really, and we've grown tremendously since I've started at this company and acquired a lot of different companies. But when people think of StoneX today, it's not just a commodity brokerage firm like you would have thought FC Stone back in the day, or Farmers Commodities if you go back even further. StoneX is a kind of a financial services company now that does everything. Equities, commodities, anything you can think of under the sun that has to do with financial services, we do.
How long did it take you to feel, because you mentioned you guys do the whole gambit, except banking, but how long did it to familiarize yourself with all these different markets? I mean, it's one thing to read at Iowa State or Illinois, oh, this is a call, this is a put, this is this. But I mean, until you kind of knew that like the back of your hand almost, how long did that take you?
That's a really good question. So like when you start to work at our company, you have a couple of years where you get paid a salary, and then they kind of throw you into the deep end. And if you can swim, you survive, and if you can't, then it doesn't work out, right?
Oh, yeah.
And part of that's timing, whether you're brought into a team and a lot of it has to do with luck, to be honest with you. And I'm very cognizant of that. But yeah, it took me a couple of years to become comfortable with it. And it's a difficult thing to start out in this business right out of college, because a lot of the people that you're going and trying to sell to, right? Move your business to me. I'll be your advisor. Like, they know a lot more than you do. And it's probably very evident to them when you're coming in to give your little pitch. So not an easy thing to kind of break into as a young person. But again, through fate and luck and my peers around me, I had some really good mentors here that helped speed that educational process along for me. And that's something I really enjoyed about working here is, people are willing to help the younger guy. They don't view them as, competition or trying to keep them down. And I've tried to do that as I've become obviously a little older and developed some gray hair. I've tried to help some younger guys as well, or girls in our company, because without help, I mean, you're not going to make it, period. So you pay it forward, and that's what keeps the cycle going.
Is that how you're able to overcome some of those initial challenges, kind of being younger and trying to do your pitch? You just said, I might not know, you probably know more than that, but I can get you the answers. Like, I have resources.
That's a really good question. And I think, probably the three most important words in my vocabulary are, I don't know, right? You have to know when to say those words and be willing to admit it, because people can tell when you don't know and you try to make something up. So yeah, I learned how to use those words very early on and often, and seek help. But I think when you're starting out in this business, there's a lot of people. It's a very mature business. People involved in grain trading it's one of the most efficient markets I would say in the world. So for me to add value to the grain team here in Des Moines that I got brought into, I had to become kind of a subject matter expert on something and be able to, provide some value add to the team, right? So I became an expert on over-the-counter contracts and helping some of our commercial customers with grain origination, something that previously 20 years ago, we didn't really assist a lot with, and grain origination contracts weren't that complicated, and companies didn't really put forth a ton of effort in offering a lot of different services or contracts to farmers. But because competition has increased for those bushels, via increased on-farm storage or end users buying directly from farmers, consolidation, all this stuff has kind of by necessity forced grain buyers to provide better service to the farmer, through cash grain contracts. So something I've really prided myself on, I guess, throughout my career is helping my customers service the farmer better and offer better risk management solutions to the farmer. So that's what I became an expert on. And I was able to kind of help grow a business that was already existing in certain areas. And that's how I provided value to the team.
And you noted I put my head down, did a lot of research, and I became the specialist at this. What kind of resources are you pulling from when you're putting your head down? I mean, I know we called you a week or two ago to talk about Delta, and I'm sure there's some growers out there that are like, 2022 might be a good year that I can really dig in and learn a little bit more. But we're not in school anymore. So where are you turning to?
That's a good question. There's not like a good handbook out there, to be honest with you, on a lot of this stuff. It just takes some digging, some Googling, here internally we have some training, but really you just got to study the actual material, how the contracts work, or the parameters of a given structured product or whatever. But I found that education a lot of times is the best way to sell somebody something, right? I mean, I want to work with educated customers. It's a lot easier and more fun for me to work with educated customers. So a lot of my sales tactics or, the way I've grown that business is just by teaching people about it. And the more you teach people about certain things, the better you get at them yourself. Because, unless you can actually explain something to somebody, you really don't understand it that well, and explain it in a simple manner, right? There's a lot of people who can, talk forever about certain subjects, but, it just goes right over your head because they're not able to simplify it enough for somebody else to digest it. So Yeah, I mean, I just really, really bear down on it, and something that we do as grain brokers, a lot of times we'll do like outlook meetings this time of year. So we'll go and do an outlook meeting on behalf of our commercial customer. They'll bring their farmer customers in, and it used to be 20 years ago, you'd get up there and you'd go through the supply demand, you'd go through the recent WASD report by the USDA, give your little grain outlook, and you'd be done. And something that I concentrated on increasingly throughout the years is I still do that. The farmers that come to those type of meetings are interested in, the news of the day and what's influencing markets, but a lot of them are pretty aware of that already, right? So I like to spend more time talking to farmers about risk management. What contracts could you be utilizing to help lock in some profit? Have you taken the time to calculate a break even? Do you know how crop insurance works into your marketing plan? And, even within the past few years, I've started to get way more into the crop insurance piece of things. And as I've done that, it's been kind of eye-opening to me how important to a producer's marketing plan crop insurance is. And I think there's people who are experts in crop insurance out there, and there's people who are experts in futures contracts and options contracts and how to manage price risk, right? There's very few people that know how to fit those two things together. And if I was sitting in a producer's chair or tractor cab or whatever, right, I would want to know all the information at all times. Like if I were to sell now, how much money am I making per acre? I would not sleep a lot unless I knew that information. So and maybe most grain farmers are just more easygoing than me. I am not an easygoing person, but by nature. But I think having all that information in front of you at all times helps you make better decisions. And I tried to teach people to do that through the Outlook meetings that I've done in recent years. I think it's much, much easier when you have a good piece of software to do that. You guys have obviously done that and have incorporated crop insurance and different financial instruments, cash contracts, and how does that all fit together when it comes to actually how much money you're making or losing per acre. And I'm excited for farmers to try out your guys' software, to be honest with you. I think it's going to be a big success. So
wow, Jake, economist by degree, salesman by day. Look at how you wrap that conversation with the perfect pitch at the end. Bravo. I like the fact on teaching. I think there's going to be not everybody knows about futures and options and other stuff. And I was thinking it'd be cool at our company, at least for those that don't know coming in, like somebody teaches you and then you have to teach the next person, because I completely agree. It's one thing to kind of nod your head in the back of the class and say, yeah, I get it. And then you have to stand up and actually present. You're like, definitely kind of an overwrap.
It is a whole different thing. Yeah. Like when we do grain origination workshops here at our office, and we've been doing them for probably 5 years, but one of the fun exercises that we do is we have the originators kind of pair off and they take turns. One person's the farmer, one person's the grain buyer, and the farmer gets to ask, typical farmer questions that would get asked of the grain buyer when explaining a contract. And you find out really quickly if they're paying attention or not, if they're able to explain that contract to the, farmer that's sitting across from them. So it's a really, really good exercise. And, I think anybody who's trying to learn something new, like if you really study something and try to restate it or explain it to somebody else, and that's just going to force you to become even more versed in how that works. Like, when I'm getting into Outlook meeting season, like right now, I'm never more in tune with what's going on in the market because I'm forced to be. When you're writing comments in the morning and you send it out to everybody, that's one thing. But when you're getting up in front of 100 people and they're asking you questions, you want to be pretty prepared.
Oh yeah. And on that comments, and you kind of mentioned all the different data points that you guys are sharing during Outlook meetings. I'm curious, do you have 32 hours or 48 hours in the day? It seems like with comments that you make, you send via email, you're going to have a few blog posts on Farmers Risk website. I mean, how are you taking all that information every day and synthesizing it down? Like there's Twitter, there's news, there's this, there's that. I mean,
yeah, that's a really good question. So given day, I'll get in early, right? And you read for the first you're reading throughout the day, right? So a lot of the comments that you make the following day, maybe you've read throughout the previous day, but
And
are you going to
what do
read
you
a lot? What's
What do you
that?
read? First thing in the morning, get your cup of coffee. What do you read? What is it?
So I'll pop up Bloomberg. I subscribe to Bloomberg. Reuters has some good news stories as well. But to be honest with you, like the way that I distill news anymore is through Twitter a lot of times. So um, we obviously put out internal reports as well, and I read my colleagues' stuff. But a lot of times you're not coming up with an original thought all the time on everything you're writing, right? You're taking somebody else's thought or a bunch of different thoughts and distilling it down into what you think is important for somebody. So the fact that somebody's reading my comments and trust me to distill down information, I take very seriously. Um, but yeah, I typically will read as much as I can, try to find what are the most important headlines of the day influencing the markets. And obviously there's some that are short-term headlines on a daily basis, some that last longer. But the comments that I put out in the morning are more geared towards like what's affecting the futures market, right? What's affecting things that honestly that producers think about. So most of my customers come to me for advice on things other than that though. So my customers as commercial grain elevators care about two things really. Number one, basis. And they make money or lose money trading basis. And another way that they make or lose money is spreads. So, we're advising our commercial customers on basis and spreads really every day. So, a lot of farmers out there a lot of them do understand basis very well. A lot of them understand spreads very well. There are a few though that you can tell that think, oh, basis is the difference between, it's what the elevator's making, right? But that's not the case. So basis and spreads act to basically help spread out the supply of grain throughout the marketing year, make sure we don't run out, make sure it's incentivizing people to hold grain off the market if there's too much. And you're taking something that's harvested during a month and a half and you need to make it last 12 months, right? So that's the job of basis and spreads, and they're extremely efficient at doing it. And our job is mainly to consult our clients on how to manage the basis risk and the spread risk, and then also how to help with origination efforts. Because commercial grain elevators, I believe will always have a place in the grain trade or the flow of grain from the producer to the consumer. They have the physical assets that help store the grain. Now, granted, there is more farmer storage being built every year, right? But you can't duplicate physical grain assets. You can duplicate certain things out there, like think about Uber and Lyft, right? Uber and Lyft, they don't really make money, right? To my knowledge, Amazon makes a lot of money. Why do they make a lot of money? Because they have the physical warehouse. It's the physical assets that they're able to help put those products close to people to get them to people quickly, right? And that's kind of what grain elevators are, to be honest with you. So I'm a big believer in the cooperative form of business. I love working with co-ops, and I love the farmer ownership that goes into that and the origins of it. And I hope it lasts a long time. So I like helping. I get joy out of watching my clients have success financially. And I take it very, very seriously, whether or not they're making or losing money when it comes to grain. And you have to take it seriously without taking it personally, though, right? Because we all are going to make mistakes at certain times. None of us know the future or have a crystal ball to help predict anything, but we just take the information that we have at hand in front of us and try to make the best decision we can with what that information gives us. And a lot of times when it comes to the farmers that I deal with, I'd say the most common mistake that they make is not making the wrong decision, but not making a decision at all. They inaction is a decision.
Yeah. True. Well, I think we can get into you almost have a separate podcast entirely about basis and how you help out grain elevators and co-ops and all that other stuff. On the news front, though, I mean, sometimes when you're scrolling through Twitter or you're looking at the news, it's hard to see the whole picture, which I'm sure which is part of the training as an economist. I mean, sometimes you see the alert that riles motion, and you're thinking, oh crap, this is the only thing, but you can't see the trees from the
forest. You missed the forest for the trees, right?
Yeah. How do you kind of keep that perspective, or what's the tips and tricks?
Yeah, I mean, a lot of the stuff that's out there on Twitter is what I would call noise, right? It's short-term things that affect the price in a very minute way for a short period of time. But then there's more longer-term trends that exist out there. There's things that are changing every day that affect the price, right? But part of the things that I do on Twitter to help distill down like all the stuff that scrolls across your screen is, I'm a big proponent of TweetDeck. Okay, so if you're on Twitter.com, my recommendation to you right now is to go in and type into your little URL thing up top, TweetDeck, like a deck attached to your house, .com. And you can make different lists, so you can organize all the people you follow into different categories. I've got an ag one, and I'm a big Cyclone fan, and I'm a big golfer, so I have each of those. I have a weather one, and it live scrolls all the tweets from all the people that you put into there real time. So there's no algorithm influencing what you're seeing. It's everything all the time, and it helps you organize that. You can track the things that you like and save different things to come back to, but anymore, we're in a digital informational age where everybody has access to all the information instantly all the time. And it's become increasingly difficult to say, I'm going to write information and be able to charge for it, right? Because it's so readily available everywhere. But there's still a need to distill for people, I think. There's still a need for that one-on-one advice. A lot of my commercial customers probably have a better feel for the local basis environment than I do in their given area all the time, right? But that doesn't mean that they don't want to run things by me and have another set of eyes on things, because the decisions you're making have huge financial implications on the success of the company. And sometimes having that peace of mind that someone else agrees with you or maybe doesn't agree with you, you need to think about it again. I think it's important to have a consultant, which is what I am, a risk management consultant, right? It's a more formal way, or there's less negative connotations, I guess, than the word broker. But I'm a risk management consultant. I think it's important for people to employ consultants or get advice from people that they trust, that are going to be objective with the information that they give to somebody. You want people that care about you, but don't necessarily care about your feelings. Okay, that you want people that care about your financial well-being, but they're going to be able to tell you the tough things all the time. So whenever I'm dealing with farmers, I think it's really dangerous out there. There's a lot of newsletters and people that write up information that I think are based on subscriptions, right? And if we know anything about human psychology, people read and listen to what they want to hear. And I'm more of a fan of telling people what I think they need to hear rather than what they want to hear. And if you're out there trying to sell subscriptions, that's not the best way for you to make the most money. People are going to subscribe to things that fit their line of thinking. But I think it's important to talk to people that maybe don't think the same way as you, or might tell you things that you don't want to hear.
What are some of the long-term trends that you're kind of keeping in mind right now? Is there like 3 of them that you have sticky noted in your office or something like that? Is like, these are the next 6 months to a year, this is what I'm focused on?
In the last year and a half, we've kind of done a 180 with the grain market. We went from a super low price environment, low volatility, comfortable supply, both domestically and globally, to the exact opposite in a matter of a year. And we are in price rationing or demand rationing mode when it comes to price, right? We have high prices, and the job of the market is to try to slow down demand enough so that we don't run out. And we're still in demand rationing mode. There's some issues in South America. That's the kind of the main focus of the market today, is weather in South America and production estimates in South America, and whether or not the U.S. is going to get another shot from an export standpoint to be the cheapest provider of corn and soybeans throughout the world. But one of the main things that I've been concentrating on recently is inflation. So and this would be we'll do a blog post about this maybe sometime, but there's a measurement in grain supply demand called carry out to use. Okay, so you take the carry out, that's the amount of grain that you have left over at the end of the year, or in this case, what we're estimating to have left over at the end of the year, corn and soybeans, and you normalize that number by dividing it by the total use or the total demand, and it generates a percentage number that gets spit out. And traditionally, that's been the best way for economists or analysts or brokers to explain what the equilibrium price of corn or soybeans is, right? Because we can look at those historical carry out to use figures and where prices were at that point, and we put them on a scatter graph, and there's a correlation, right? A pretty tight correlation. But this year it was a little wonky. We're dealing with corn and soybean prices that were substantially higher than what we would consider equilibrium, right? So we started to dig in. Maybe there's something happening here that could explain why that is. Some people were saying, well, it's South American weather premium. But when corn's $1.50 overvalued and beans are $2.50 overvalued, that's a lot of weather premium to have built in based on what's going on in Brazil and Argentina. So we adjusted all the historical prices into today's prices using consumer price index data. And the correlation improved about 10%. So like whenever you're dealing with correlations, anything above 70%, I would say, in grain markets is really good. But you went from 70 to 80% when you converted all the historical prices into today's prices. And all of a sudden, a corn market that looked like it was $1.50 overvalued is fairly priced. And it was a big eye opener for me. So during my outlook meetings that I'm going to be doing this winter, that's going to be a major focus of mine, is using that to help explain why we are where we are. It's not necessarily a predictive measure, but it does help explain why corn and soybean prices are much higher than they would have been if we had a similar carry out to use ratio, say 10 years ago. So inflation is definitely having an impact. And, whenever I do outlook meetings for farmers, I try not to be leaning too heavily one way or the other, right? Because the longer I've been in this business, the more I've realized that, we don't know. Okay. So anybody that gets up there and is absolutely certain about anything when it comes to predicting price, they just haven't been doing it long enough. Okay.
We're gonna see any hot takes out of you anytime soon.
No.
Okay.
No. Yeah. So I don't do that. It's important to always have an opinion though. So when someone comes to listen to you speak or they read your information, they're looking for an opinion from you. And it's not a perfect opinion. I know that. I take the information that I have and I try to make the best judgment call I can with it. But it's, always comes with a large grain of salt. So I think it's more important to look at things objectively, which you can do really easily when you're just putting something into a computer program and looking at, your profit and loss matrix with different yield or price scenarios. That doesn't lie, right? You know that you're vulnerable if price drops below this level. What can I do to help protect that? I mean, that's how I prefer to operate a business if I was a farmer, rather than trying to predict whether the corn's going to go up or down or should sell or not today. Just look at the numbers and let them tell you what to do. The market oftentimes will tell you what to do. And that's especially true in basis trading and spreads. So as long as you have an ear open to listen to kind of what the market's telling you from a profitability standpoint, okay, not necessarily price going up or down, because we all know that if something's super profitable for a long period of time, what's going to happen? They're going to produce more of it, which is going to increase supply with the same amount of demand. That puts pressure on price, right? Back to our economics. So there's cycles that exist out there. And, if something's extremely profitable, it's usually a good idea to be pulling the trigger and making some decisions, even if it's an uncomfortable decision to make. So I like to say that the more uncomfortable you feel about making this decision right now because of the uncertainty in the market, that usually means that it's probably one of the best times to be making, decisions about managing risk because of the amount of uncertainty out there.
Interesting. So I got two follow-ups on that, and then we'll wrap this up. I first off, I do love the way you kind of present information on some of the publications that you have. It's the teeter-totter board on if it'll go up or down or whatnot. You just have 6 boxes and say 4 boxes are over here and 2 here. And I see where hey, I think it's going to go this way because I have more boxes, on this side. But it's like you kind of give the the reader the ability to also say, oh, he's thinking this way. This is how he's getting to that opinion. But I want to move one of these boxes. They can kind of make their own decisions.
Absolutely. Right. And most people you'll find like they fit the headline to what the market's doing. Right. So if you read like equity headlines, if the equity market's down today, for instance, or it's up today, right? The headline is traders are more focused on corporate earnings than inflation concerns. That gets pushed to the back burner. If tomorrow it's down, well, traders are worried about inflation and they're not as focused on earnings. So the same thing is the case in grain, right? I mean, people are going to fit the headlines and the bullet points to what the market's doing for the most part. There's the stuff that I generate on a daily basis that's more fitting with what's going on in the market currently. But there are times where you might disagree with the price action that's occurred recently. You think corn and soybeans are overvalued, and it's important to come out and say that at times. And sometimes you think it's undervalued. And for a person in my seat, I think brokers and or grain buyers get accused a lot of times of being like permanently bearish. A lot of times, if they're buying grain from a farmer or they're working with a customer that does buy grain from a farmer, right? The people that are accused of being bullish all the time are the people that sell the newsletters to the farmer. And there's a balance there. And I probably early on in my career was maybe I got into this pattern, so my first year in this business was 2012, quite the year to cut your teeth in grain markets, right? So it was a couple of years before probably 3 years before I saw carry develop in the bean market, period. But then we went through a period of time, 6-7 years where we had really comfortable supply demand situation, prices were low. It just felt like things weren't ever going to really get out of that rut. And then something like, the past year and a half happens. And the moment you think you got something figured out, I guarantee you the market's going to come around and teach you something. Okay. And I continue to learn to this day, and I know I will until the end of my career. But the consistent theme, I would say, as I get older and more experienced, is I know that I don't know. So
that's true. And getting over the discomfort that knowing that you don't know yeah.
It's okay to know or not know, right? I mean, Our job is not to be able to, thankfully, my job is not to predict if corn prices are going up or down. Okay. If that was my job, I'd probably be living in a van down by the river. Okay. But my job is to kind of help my customers make good decisions with the information that's available to them, right? Bottom line.
So you mentioned South America is one, inflation's another.
Absolutely. So, we're in an environment now where the Fed's finally woken up to the fact that, inflation's real. It's not transitory.
Yeah.
And I think they're pricing in, up to 4 inflation hike or interest rate hikes during the next year. Interest rates are a interesting beast. I mean, farmers are especially vulnerable to higher interest rates because of how leveraged they are in their business. And that's something they need to be thinking about, managing that risk separately from their commodity price risk, right? Is managing my borrowing risk, especially when you're as leveraged as you are. Because, you and I weren't even probably alive during the 80s and the farm crisis when that occurred. But, what made that especially painful was high interest rate environment. So, yeah, I am bullish interest rates, essentially. I think that could have eventually a negative impact on commodity values if they rise high enough. But, the reason that people are talking about raising interest rates is to curb inflation. And what's driven inflation is higher commodity prices. So there's this cycle that exists there in an ecosystem between interest rates and commodity prices. And we definitely kind of lump interest rates in with inflation and talk about those two things simultaneously. But if I'm a farmer, and there are ways for you to manage interest rate risk as a farmer, you can talk to your lender about, locking in some longer term interest rates. And if I was in the market for a house like you, I would be thinking very seriously about buying that up now. And there's an inverse relationship between home prices and interest rates, right? So you're going to pay a little more for your house today because of the low interest rate environment, but if you plan to stay there for a while, it's probably a good idea to go ahead and lock that in.
But I'm hoping to sell my house, then have everything in the U-Haul driving to the title company the housing market crashes for whatever reason, and then I buy the other. That's how I'm planning it out in my head. But
All right. Yeah. Sell
TBD.
first. Don't buy first. Yeah.
Well, we are bumping past the hour already. Jake, thanks so much for your time. Definitely owe you a beer next time I'm in Des Moines, and it's been a pleasure.
Yeah. Thanks for having me, guys. Look forward to doing it again.
Jake Moline is with StoneX and will hopefully be joining us for more future podcast conversations as we move forward.